Thank you for that. So ChatGPT is really letting me down with my pie chart jokes, so I thought I'd just give you a pie this morning. And unfortunately, it's not a breakfast pie, but it should be delicious anyway. So today I really wanted to focus on where these segments are today, where they're moving, how we see things, and what we're really keeping an eye on. If we look at all of these different segments, and this really just is the anterior seg, so I don't have retina on here, but IOLs are gaining some momentum, and we're still seeing good growth in that segment. This is what we're predicting over the next 5 years, and so that's really encouraging to see nice steady growth in a very large market like that. If you skew to the other end with glaucoma surgical, which is a smaller market revenue-wise, we are still anticipating really good growth in that segment. There's a lot of room for growth internationally. There's still room for growth here domestically, and we're still seeing lots of new innovation hit the market, so we still have a lot of excitement for glaucoma surgical despite some of the reimbursement challenges that we've seen and are likely to continue seeing. But really, you kind of see how all these different segments are moving. Refractive is kind of staying steady, but we are anticipating a little bit of growth there because we've got some new technology that's hitting the market. So what is bringing us to that revenue piece? And this is looking at only US procedure volumes and just last year and this year. So how are these different segments moving year to year? You can see retina, which is IVTs mainly here, is growing. Everybody's growing with the exception of refractive, which I don't think any of us are happy to see. And kind of trying to dig into why that might be. Whoop, went the wrong direction. And it didn't even get any pie. Okay, so on the refractive side, if we look at this quarter by quarter and kind of looking at this mix and what's going on here, obviously we had our drop in COVID. We had a really nice bounce back. We got to kind of address some of that backlog of patients, but then we just kind of kept stagnating a little bit here and even a decline in the last year or so. And when we're looking at what's causing that, there's just been a lot that's happened in the last years. It's been a really rough economic climate, and this particular patient segment is not insulated at all from that. So you've got younger populations, they don't have as much savings, they're hit really hard with inflation, with student loan repayments kind of coming back. The cost of financing this procedure is higher because interest rates are higher, so there's just a lot of things that are really kind of squeezing that market. But if we look internationally, we're not seeing that dip. So we are looking at what regions we are successful in, and particularly with lenticular extraction and phakics are seeing some really strong growth or gaining a foothold, especially in the APAC region. So we're kind of hopeful in seeing what lessons we can take from those markets and see if they can apply here in the US and how we might do that. But this is good to look globally and see that there's still a lot of excitement there among the space. If we move on to IOLs, everybody's favorite topic here, I like to look at two different metrics. I like to look at the penetration rate, so the percent of IOLs in each category out of all IOLs that are implanted. I also like to look at discrete numbers because they kind of tell different stories here. So this first slide is penetration, and you can really see actually in the last year or so that PC IOL, which is inclusive of PC torics too, that penetration is going down. But we are seeing some growth in the intermediate optimized and a little bit in the post-op adjustable lenses as well. So this newer technology coming into the market is gaining a little bit of foothold. But if we look at the overall numbers, we're growing. So we're seeing more cataract procedures. So the fact that that penetration rate is down, the actual discrete numbers aren't down that much. So it gives you a little bit of kind of maybe context around this. But it's also good to remember, too, the vast majority of our IOL patients are monofocal patients. And this PC market is very exciting. We have a lot of new technology coming out, which is always something that we see help. I mean, when we see a new IOL hit the market, there's always greater demand. Doctors are interested in it. They're marketing it on a local level. That stimulates growth. All of that tracks in here, and we're excited to see where it goes in the next year or so. Now, I know she said this is like everybody's least favorite topic, but there's been a lot that happened in dry eye this year, actually, and we found it really exciting. So if you haven't been watching the news at all, there were a lot of recalls with OTC drops, specifically the kind of generic preservative-free drops, and it was very serious complications. And so that started happening, I think the first warning was issued in March by the FDA, so we started surveying doctors about halfway through the year. And at that time, about a quarter of ophthalmologists were reporting that they were worried about contamination of these drops. And almost all of the doctors were already warning their patients not to substitute name brand and get away from those name brand drops. So we started really keeping an eye on this to try and see what impact that was going to have on the treatment paradigm. Were we going to go to more pharmaceutical options? Were people just going to be, doctors going to be recommending brands that they knew and they trusted for patients? And we're still watching this, but I do think that insurance and insurance protocols has some say in this, obviously, and I think they're insulating us a little bit from the results. At the same time, we had a lot of new drug releases. So we got Mibo, Xdemvy, and Vive. They all got approved by the FDA around the same time. And we, in our polls, were showing pretty good adoption. So we saw a lot of doctors were excited about having new dry eye drops for their patients. A few of them, about a quarter, were excited to kind of wait and see what the results were. My guess is that they were kind of hoping to see what patient types these drops worked best for. As we kind of talked about in that earlier poll. And so this was, we're keeping our eye on this. This is exciting for dry eye because there's a ton of unmet need here and patients that are constantly, and doctors who are constantly looking to better treat their patients. So highs and lows here, obviously refractive patients are more heavily impacted by these challenging economic conditions, but we have some new product releases. The Phagix hitting the US market, we've got some new lasers that are coming to the US market as well. All of that does, just like IOLs, when the doctors kind of bring that into their practice and start marketing it on a local level, it has an impact. And we see that. And so we're hopeful that this new technology coming in is going to stimulate a little bit more excitement around there. Lots of new product launches. I don't know about the rest of you guys, but this ASCRS feels a little bit like the ASCRS of the good old days with, you know, all of these press releases about new products being launched and deals being closed, and so that's really exciting, and it hasn't been like that for a few years, so we're excited to see how that ends up. Reimbursement battles seem to be stable for now. From what we're hearing, it's unlikely to be over for good. Will be a challenge, but we've worked really well together to address that for patients' betterment, and I think that will continue. But we're keeping an eye on some things here because new product launches, even if we have good adoption, it doesn't necessarily translate into volume. And volume is obviously where the money comes in. So we're excited and cautious to see that. We want to see if we can duplicate the success that we're seeing in APAC when it comes to refractive and check on dry eye. But also, it is an election year, and that does come with its own uncertainty. And I'm sure my colleagues up here will talk a little bit about some of the financial markets and things. They don't usually like uncertainty. So we're keeping our eye on all of that, but we're very optimistic for 2024 and excited to see some of the new products that are talked about today. Thank you, guys.
Hi, everyone. It's great to be with you today. My name is DeGagne. I'm a research analyst at PitchBook, where I cover the digital health and medtech markets. Today, I'm going to be walking through a series of slides on ophthalmology VC trends, and innovation opportunities within the sector. First, a bit about PitchBook for those not familiar. PitchBook is a capital markets database with comprehensive data and research on venture capital and private equity, along with deals data and fundraising data as well. The data I'm going to be showing today is pulled from our PitchBook database. So getting into the data slides here, this shows global ophthalmology VC deal activity over the last 5 years. Perhaps not surprisingly, deal activity peaked in 2021. I think it's also notable here that the number of deals on a quarter-to-quarter basis has been relatively stable. So that's kind of a positive sign in terms of the kind of the staying power that we see here. Certainly, it's also notable that we saw an uptick in Q1. These screens are pretty good, but in case you can't see it in the back, in Q1 there were 20 VC deals with a total deal value of about $470 billion. We were able to do this data pull as of the end of Q1, so as of April 1st. And this could actually tick up higher over the coming weeks as delayed deals get reported and added to the database. And here we have medical devices, VC deal activity, which is going to be including equipment, diagnostics, drug delivery, lenses, and other medical devices as well. Here we have a similar trend here. Definitely a peak in 2021. And again, pretty strong result in Q1 2024 so far. And the effect was actually even a bit more pronounced here, with deal activity reaching a multi-year high, with 10 deals reported. And this is the biotech VC deal activity equivalent. And so the first slide that we saw was essentially a combination of this one and the one from medical devices as well. I think it's interesting here as well that we did see more of a downward trend from 2021 through the end of 2023, which we attribute to partially due to higher interest rates, and as well as lower investor appetite for, in some cases, unprofitable business models, but also higher risk business models, generally speaking. Again, we saw that uptick in Q1. I think it remains to be seen whether the strong results we've seen for the year so far, whether that's an outlier or if that's going to if that's set to continue as part of an upward trend. But either way, it's good to see some positive momentum here to start the year. And this is showing global ophthalmology M&A activity for the last 5 years. Interestingly, 2019 was an incredibly strong year. This was pre-pandemic, and then certainly there were kind of pandemic disruptions in 2020. For 2023, there was also a decent number and total value of M&A in ophthalmology, which we would attribute partially to lower valuations, making acquisitions more cost effective. And then looking forward, I think there are a couple drivers for M&A. Looking ahead to the next year, I think one of them being, of course, interest rates. Not just the absolute level of interest rates, but also the expected change. Meaning that if acquirers are expecting rates to come down 6 months from now, it could make sense to wait until that point to pursue a transaction or to take on debt. So we're kind of waiting for that to shake out, and that could be a driver we could see later this year or perhaps into next year. And then additionally, another driver as well, I think, is if strategics and corporates sort of decelerate their cost cutting and pivot more toward growth, that could be another driver for increased M&A activity. This table is showing the top ophthalmology VC deals since 2020, ranging from 117 million deal size up to Land Bio at 310 million. For 24 so far, 2 deals made the cut here with Jisheng Pharmaceuticals as well as Iconis, and both of those deals occurred in January. In terms of the kind of geographic spread here, we have a few from China, a couple from the UK, and a few here in the US as well. So it's pretty geographically diversified, as well as diversified across different series levels. This table is showing ophthalmology VC exits from 2020 to present. Certainly there have been other transactions and spin-offs in this time period, but this is just showing the VC exit side of it. And again, there are kind of a few from China and a couple in the US as well. I think looking ahead to 2020 for the rest of 2024, we expect there to be potentially more exit opportunities for startups this year compared to last year, as well as a potential reopening of the IPO window to an extent, perhaps later this year. But we're still going to be certainly well behind the levels that we saw in 2021. But we do think that this year could be, we do think that we've kind of reached and surpassed the low point in terms of in terms of exit opportunities, in terms of IPOs, which were across all of medtech virtually non-existent for the past year and a half. And then finally, we have top ophthalmology VC investors. Generally speaking, these investors are investing in the early stage and late stage series, and not so much pre-seed or venture growth. Visionary is leading here with seven deals, and so it's pretty well diversified here, and so I think that this is. So I guess, looking ahead, we could probably see these investors participate in future deals as well. But generally speaking, we don't have. There's certainly other investors that aren't listed here that are involved in many deals, and so there's certainly investors out there for startups looking for deals. So that's I think that's all the data that I have to share for you today. Feel free to connect with me if you have any questions about the data I showed today or our database. I look forward to the rest of the great sessions that we have planned today. Thank you.
All right. So I'm going to talk about the state of the financing markets, and a little bit will overlap with what's been said, but if we look to how the equity markets have performed over the last year, it's been interesting because they seem to look through all of the challenging macro environment factors, such as what the Fed rate is doing, what the inflation rate is doing, and despite this, we've seen the S&P 500 move from nearly 4 to 5,000. I think what we're expecting this year is a little bit of a correction. So we're going to see that Fed fund rate hopefully start to come down. Maybe it's June that we start to see those rates stabilize and come down a bit more. But I don't think that the equity market has totally seen the correction that it needs to. And so there could be a bit more volatility that comes in, especially in the second half of the year with the election, which, as mentioned, will cause a lot of volatility just given how complicated it will be this year. If we look at how equities have performed and tried to unpack it a bit, it's interesting to see the purple bar, which is the ophthalmology sector, has performed pretty much in line with the S&P 500 healthcare, but has lagged a few other areas within healthcare broadly. It's also, if you break this apart between the biotech versus medtech, it's almost a tale of two cities. So biotech is up 29%, while medtech is down 7%. And I think this gives you a good sense of how investors are thinking about the sector and where their mentality is. It seems like biotech investors are back to the point where, if there's a good catalyst to drive the stock, they will lean in, whereas medtech is a little bit shakier. And you're really starting to see that in the IPO market as well. So this is a look back over the past decade of healthcare IPOs. Two things to note. 2020 and 2021 was very outsized. So if we have an expectation that that's going to come back anytime soon, I think that is not reality. But there hasn't been a medtech IPO. All the activity to date has been led by biotech and one services IPO. And of those biotech IPOs, they've been a bit of the later stage from a clinical perspective, but there's also been a lot of insider participation to kind of shore up the stock and give people credibility that that company is ready to be a public company name. And I think this leads to, as the IPO market reopens, what will that investor mentality be? It's not going to be the lean in and the bubble that we saw in 2020 and 2021. It's going to be what we're calling sober and clinical. So this idea of strong support from insiders, a broad understanding of what valuations are, the correction that has happened, and a view that models will not be taken. There's going to be a lot of diligence. Investors are going to be far more discerning, and frankly, they're going to need to spend more time with the stories. So we're seeing people spend time pre-IPO, kind of testing the waters and the roadshow, doing 4 or 5 meetings with investors to say, this is what the story looks like, this is what stage we're at, this is the progress that we've made to date. And I think that pre-work is frankly something that's going to make IPOs successful, but takes a lot of time and initiative and needs to be kind of baked into how we think about the IPO process. So how do investors think about ophthalmology? I mean, on the benefits side and the positive side, there is a very limited universe of public opportunities to invest behind, as well as an expanding universe of acquirers. I think people like the sector from the demographic trends, and we saw it with a lot of data. There is a good amount of growth and a good amount of innovation within the sector, which makes people feel structurally it's quite sound. The areas of consideration are reimbursement, I'd say, is one of the high ones, because what investors want to see is a very de-risked opportunity. And when you throw in questions around reimbursement, and also, you know, is this a one technology company? Is this a platform? Things of that nature become more and more in question. I think the last thing that people want to understand is ability to compete against the larger players. So the flip side of the coin is, does this technology need to have its own commercial sales force? Is it a big enough opportunity set? And is it a unique enough technology to go win against some of the larger players? M&A. So, you know, this slide is actually a little bit of a broader view. If we look at where M&A ended up in 2023, it was down 30% from the historical averages. Now, M&A volumes have not declined 3 years in a row in over 40 years, so hopefully this trend changes. And I think there's some things that will be drivers of M&A. I agree around the interest rate point. You know, that's starting to stabilize and hopefully decrease in the second half of this year could be a big driver. I also think there's a bit of an acceptance around some of the valuation correction that's happened. What we saw last year was there was a big disconnect between buyers and sellers, right? Buyers wanted to feel like they were getting a good deal, and sellers were still holding on to valuations and rounds that they had raised in 2020 and 2021. I think now there has been enough time and enough seasoning in this new valuation environment that hopefully that disconnect closes. The one hurdle that will continue and that has impacted last year's volumes was the regulatory environment. There's been a lot of cases. The FTC is not taking things lightly. They will go to a second request. There's a lot of pre-work that needs to be done around if there's any risk and if there is a view that the deal won't close. But that is almost a new normal, and people have kind of accepted it. So it gets baked into the deal transaction work timeline. And I'm hopeful that as things continue, maybe with the change in what the government leadership looks like, that the FTC environment will become less onerous over time. And so, what is the outlook for ophthalmology M&A-wise? I think there is a increasing aggressive buyer universe. We're seeing a lot of large strategics and financially sponsored backed players that have capital to deploy. There's been a lot of innovation and exciting technologies that are emerging, and people understand that to win in this sector, you need to have a pretty broad bag of leading technologies. The reopening of the IPO market, and I think, right now we're in the early stages of that. I'm hopeful that second half of this year, early part of next year, you'll really see the IPO market come back into its fulsome force. But that is a catalyst, right? You now have, as a seller, you can say, I have a couple of options, and I can drive either this IPO or I could go down this M&A pathway. And it feels like the boards that we've been talking to on the emerging company stage, they are more open to either exit. And so they will likely run this dual track process where they look at both the IPO and an M&A exit with kind of an equal footing. And lastly, I'd say, the regulatory environment that we talked about and the US elections are probably going to be things that potentially slow down the M&A track. We are, overall at Morgan Stanley, we are on the busiest side that we've ever been. The number of conflict checks that we're getting for our M&A practice is at a high level. But I'd say the probability of success is quite low. And so what you're seeing is a lot of people looking, wanting to put capital to work, wanting to, get a deal done, but there's a disconnect valuation-wise, or it's a regulatory question, or it's the financing markets not being totally constructive that has kind of held M&A back. And hopefully we see that return at the second half of this year or early part of next year. Thank you for the time.
Great, thank you. And that was really a great discussion. We're a little low on time, so I'm not sure we're going to have much time for Q&A, but I took away a couple things from your comments. And by the way, thank you, Aaron, is our first-time presenter here and first time we've had PitchBook here, and that was some very interesting data. It looked like, one, that we're more dependent on IPOs for exits, but yet there wasn't a lot of activity in the early stage. And then you have some questions about the IPO market. Just quick reaction if you guys have a comment on that.
Yeah, I mean, I think historically, especially when you looked at that data of 2020 and 2021, everybody just pointed to the IPO as the exit du jour. I think when you saw how companies traded post the IPO, it's now looking like maybe that isn't the only or the best exit. And so people are taking a little bit more of an equal balanced view.
Great. And if I could add one thing to that, I think as well, like startups with higher quality startups with stronger balance sheets can generally afford to wait as well. And so, I think they probably want others to go first. And so we're kind of stuck in that holding pattern until, someone has to go first and test the waters, and then maybe we'll see the higher quality ones go later.
Great. Well, thank you guys very much. It was a great panel. And why don't we transition to the next panel.